April 20th, 2010. BP's Deepwater Horizon rig exploded. 11 people were killed, and over the next few months, more than 3 million barrels of oil spewed into the Gulf of Mexico. Shares of BP have since plummeted almost 30%, leaving some investors wondering if the oil giant can ever recover. The company set aside $43.5 billion to deal with the spill, though 5 years later, BP is still in a legal battle with the government over just how much it will pay in fines, causing plenty of uncertainty for investors.
The markets have been unable to draw a line in the sand and effectively calculate how much this will have cost them and where they go from here. The fact that we're still seeing litigious issues being dealt with in the US courts effectively has hampered that ability of the markets to start trying to draw conclusions as to where potentially BP might find themselves in the years to come. And that certainly has been a thorn in the side of BP.
It's not all doom and gloom for BP. The stock has an attractive dividend of $2.40 per share. That's a far cry from the summer of 2010, when the oil spill pushed BP to suspend its dividend.
So it had been a substantial fall from grace, the fact that BP felt the need and the requirement to suspend their dividend payments for a period of time.
The spill has also caused BP to downsize. It sold assets amid the tens of billions of dollars needed for cleanup costs, fines, and victim compensation.
In a way, the restructuring program that has been undertaken over the last 5 years has actually got it slightly ahead of the curve when the oil price shock from the middle of last year hit.
While the stock is up 11% year to date, scooping up shares of the beaten down oil company comes with unique risks.
On a valuation basis, it is fairly cheap, but you then have to weigh that up with the potential for further litigation and further fines over the course of the next 10 or 15 years. And I think that really is the trade-off.
The company is still taking measures to cut costs. BP will spend $20 billion on capital expenditures this year after spending almost $24 billion last year. For The Street, I'm Scott Gamm in New York.